Yo, what's up, YouTube? This is your boy IB, coming back to you, giving you some marketeering advice about Forex. As you know, I like to go, we are not a trading channel here. Actually, we are doing something different. We are marketeering, and there's lots of difference between the two. But first and foremost, what we're going to do for those that's already kind of up to speed with the channel, we're going to jump right in. Real quickly, I'll go over. This won't be a long video. That marketeering does not require you going through or looking at any other time frames other than the monthly, the weekly, and the daily. And we don't need a bias when we marketeer. We just need a direction. And what I mean by that is that we don't really have to, or we don't concentrate on some of the intricacies that, uh, quote unquote, some traders do. Um, we are basically just focus on the things in which gonna allow us to um, make a profitable result and or position in the market. So we'll start with the monthly. Is a top-down analysis still, but there's only three time frames, as I said before. Right now, our direction is down. You know, as you can see right here, these last couple months here, it's been going down roughly since March, and this is the USD um, against Singapore dollar as well. So I look at the monthly and we see that it's a down position. And the next thing that we have to do, I won't be doing in this video, but you'll have to know about the formation of a candle. Um, and being that the market is headed down, my first thoughts are that I must understand that in a down market, the top of the candle is formed first. So this kind of looks like what this is happening. And this also says, hey, look, it's a down market too on a weekly. This weekly candle went up real nice, but it's in a down market. So it couldn't go. And it went up Monday, Tuesday, Wednesday maybe, but Thursday, Friday, it pushed all the way back down. So now, still moving down, my first thought on this weekly time frame is that this candle is going to push up a little bit just to make another wick, maybe just like this, and push down. Because look at all your wicks. If you see when a wick is formed, especially when two candles beside each other, it is normally formed somewhere in the body of the one beside it. And this one right here is pushing up, and we want to catch a nice position up here, especially if it's going to push back down. And this, I'm expecting to become a red candle by the end of the week. Right now, and see, this one almost became a red candle. It pushed all the way down, but look how far look how far it came down. But this right now still may be pushing up a little bit, and then I'm gonna place um, a limit sale order. That's another thing about marketeering. What we do is we never uh, execute a position. The market is never right on the nail as far as what we want to do with it, because our first part of being a marketeer is we want the market to come to us. So we'll never look at this right here and say, oh man, it's perfect for it to get in right now. No. First rule of engagement is that you set up a market position and make the market or foresee the market coming to you instead of just jumping in, going wherever it may take you. Right now, I'm looking at a position at about 1.33415 on the weekly candle. Not going down on there on the 5 minute or the 15 minute to try to get it all good and do all that. Not doing any of that right now. I looked at the monthly. We're going down. I looked at this weekly. Last week, as you see, it first pushed up. That candle first pushed up and gave us a position to where it looked like it was going to be moving up, but then it squeezed all the way back down. So let me check the daily. And what I should be running into is one or two daily candles pushing up, which is cool. And I may adjust my sell order limit then, but after the daily candle, I'll probably go ahead and place my order and hope it gets filled. If it don't get filled, hey, that's okay. Some of them did get filled, and when it does get filled, I'm getting the maximum of amount of that candle simply because I'm getting it in the area to where I'm getting a better price. In this down market right here, this daily candle, which in fact it probably going to end up being a green candle because it's already made a nice little bottom there. Look like it could be on the way to making or finish creating the top. But right now, I still want it to come up to this green line before I'm a seller. So, with that being said, I like it. I kind of like exactly where it is right there instead of 1.33415. I probably go with 1.33. Let's go with a limit order. You change that right here. And I'm going to probably go with 1.33500. Nice round numbers there. And we'll go into going with the round numbers. But yeah, let's go with this right here, 1.33500 for 10,000 units. This paper account right here, another thing with marketeering, we never use a live account to show and or on the internet at all as a marketeer. Traders do that all the time. They show their live money and accounts and so forth and so on. That's you do that one time or so, you know then that that's not the practices and or the guidelines within what we do. So you would in fact be identifying yourself as a trader in such behavior. Well, as a marketeer, anything that we do online where others can see outside of our private groups and networks will only be in a demo mode. So, but yeah, let's go ahead and make this sell order for about right there. I like that. So I'm looking for day to finish a green candle, maybe tomorrow finish a green candle, and as you see here, hopefully bring it down a little bit here, maybe 2 4. Yeah, I'll bring it down. I'm gonna bring it down. No, brought it down to 1.33369, and I think I'll go with 30. Modify that order right there. And what I'll be looking for is this number, these one or two. And you see the last time the green, it pushed way past that. So, I'm looking forward to go even maybe push past this in the next 1 or 2, 3 days. But by the end of the candle and or my next weekly candle, as I'll show you here, I'm going to be expecting it starts to go in my direction. So go back to the weekly here. And that's what we do in marketeering. We go in, we get this money, we're not on it. This trade, once this trade is done, I don't really have to check it, do anything with it anymore. It is over with. I'll just see the fruits of its labor later on, but I wanted to come up, touch this line, and even when it started to push back down, we'll all be in profit. And I'm expecting this one to push even down further and become a red candle. And as you can see right here, it's been going south for, you know, since March. So it's not a guessing game. This is not anything that like those guys try to scare you into. The traders where you have to know what you're doing in the bias and do this thing and jump in and jump out, and you got to know your five and your hour, and you're looking for these types of patterns or any of this. We don't look for no patterns. We don't need any patterns. We don't look for no COT reports. We don't worry about any news or anything. Don't bother us right here. This gives us enough information from the monthly, weekly, and the daily to get a direction, and we put a position in that direction, and we let the market do the rest. We've had those in the classes who put positions up here going down and put positions up here going down. And another thing is, once we find a position of the market, not a bias. See, a bias sometimes some people trade with the bias and they trade against the bias. In our direction, we never trade against the direction. So we only sell in this market right here. So that's why I got a sell limit order here. And as you can see, let me just go through the history of some of my paper trading here. All of the orders or filled. We don't do any just jumping in the trade and so on and so forth. These orders are field orders that, as you can see here, that you have to, foresee the market first. And, we foresee it and we got it. And, just in a couple of days, I think this one right now, I got an open profit of 10,000. This is like $780,000 in this account. It started with 100,000 just on the 20th. I think I started on the 20th. So in like a week. What's the day? The 7th. I've traded on it maybe the day's the 23rd. You can see the 20th. Yeah, December 20th until today's date. I've boosted it up 600,000. Just doing this small new concept of marketeering. It's not a get rich quick scheme. What we do in marketeering, another thing is that we only double our accounts. We don't go with a $300 account and say, hey, we're going to make it $10,000. We're going to make a Lamborghini happen. No, the goals from a $300 account is to make it $6. That's it. Once you get to $600, then you will reenact some of the principles, and or you start with another amount. But once you go back into marketeering with whatever amount that we are in the market with, we only double that amount. That's the end of it. Once we double that amount, that's it. It's over with. We're not looking to get to 14,000 or anything like that. We double the amount, and whatever was a part of your plan. Once you doubled it, you leave it in or take it out or do whatever you want to do with it. That's up to you. But it's not a consistent thing that where you're just leaving your money in the market. So this is just like, and as you can see, as of the 22nd, I haven't even really made the 23rd. I think I did something today. I closed one. I must have closed one share, and it's small losses. $31, $19. You don't have to take any losses. Right now, let me see the positions. I got 11 positions open. I'd like to look at some of those. Just to let you know, it works in with everything. I got some Bitcoin down here. Some coin action going on down here. Just to show you that it trades everything. A couple positions negative here, but I'm in a good position for them. So they're just going to turn. As you see, none of them are big except that one. And let's go in and look at that. I'm gonna show you how that's really, even though it's right now saying it's negative 836. The reason why I let it run that much into the negative because I took a pretty swell position out on it, and I'm in the right direction. When you're in the right direction, you don't really have to worry about it. It's way less than the percentage with this account size that I mind risking. So I was good. So let me go in on that and show you what it looks like and why it's not a concern for me. And I think I've already made my sell limit there. Yeah, my sell limit's there. That is what it is. That's over with. In the end, over the next that's not going to change. I'm going to leave that there. Over the next week's days, you'll see some of the fruits in which that starts to bear. But yeah, in this position right here, as you can see, it's $836 into the negative. But upon a closer look, if I could step out here for a moment to the monthly time frame, I'll show you why I'm just kind of let it doing what it's doing, um, and not too concerned with the position right now. I have 100,000 units on it, so and I think it's going to catch up as soon as the direction switches up. One thing you have to realize is that every candle must change direction. It must go one way first and then start another way. Another piece of information that you have to understand is that no one can teach you how to trade. Trading is like chess. You must become the chess player you are. No one can teach you how to become that chess player. They can teach you some of the rules of chess, how the moves are made, and or some strategies. But the way that the individual put those together in their own risk factoring in game is what will become the type of and define the type of player they are. Here as a marketeer, and we don't have to do all of those or get into some of the depths of trading simply because that's just not the arena that we're in. Okay, if you see here for the month, my direction is down. So I got a nice size red candle going on here. For the most part, it looks like this market been kind of in this is a real bad chart here. I don't know what's going on. But anyway, just to give you some more concept and philosophy about it, you have to become the trader you are. No one can teach you that. That's why 95% of all traders end up losing. And if they don't change, they will remain part of that 95%. So what a marketeer is, what we teach you to do is to go in there, get your money, and get out. And slowly, surely, over 1 or 2 years, teach you how to trade. It's a lot different. Thank you. You guys like the channel, subscribe, share the video. This is something new. This is something that's going to help